on to the realty debate on commercial and office real estate in the country. Linked even more closely to the state of the economy than residential, it really comes as no surprise that this sector has been under pressure for the last 2 years. The question we are asking today is the worst over for India's retail and office property markets. The outgoing Finance Minister P. Chidambaram did indicate that the commercial real estate has seen a pickup after a long time. Today, we'll try and figure that out. Has it really, or does it still have some way to go before it sees light at the end of the tunnel? My guest for the debate today, Ramesh Nair, COO Operations, Jones Lang LaSalle. Actually, they've rebranded, so it should be JLL India. Anand Sundaram, Chief Executive Officer, Pioneer Property Zone, PPZ. Rajneesh Mahajan, COO, Inorbit Malls India Private Limited. We also have with us an interesting guest, Gitesh Agrawal, Chief Marketing Officer, D&M India. The company is one of India's largest fitment companies, so we'll get a perspective from them as well. Ashish Jairath, Vice President Sales, Emaar MGF Land Private Limited, for a Delhi NCR perspective. Ajay Rakheja, Director NCR North and East Colliers International, and Sameer Jasuja, Founder and CEO of Prop Equity. So there are lots of questions to discuss, but I think the panel today is leaning towards retail, so we'll start with what's happening in the retail space, because that's an important part of your commercial market. Now I'm going to read out a few statistics because they just kind of lend some background to our discussion today. The reports which have come out so far say that as many as 40 malls have downed their shutters in the last 2 years and 18 malls were deferred in 2013. Now 10 of the deferred malls are in NCR. Pune also saw a deferment of about 1.3 million square feet, while 900,000 square feet of mall space was delayed in Bangalore in 2013. NCR's mall vacancy is the highest in the country at a staggering 55%. Mumbai is a close second with 52% vacancy, followed by Ahmedabad and Chennai. These are Cushman and Wakefield numbers. One mall each in Chennai, which is about 220,000 square feet, and Hyderabad about 130,000 square feet, have also been delayed. Now, most of these have been on account of funding issues which have led many developers to slower pace of construction. That basically gives you a picture of what's happening, but then that it's not all negative. Ramesh Nair, come in first with a perspective of retail realty in India, you know, FDI, the euphoria around it, the middle income group story of India, 1.2 billion, urbanization, all of that I've read in the JLL report on retail, it's really not panned out, even close to expectations, has it?
I think, Manisha, the correction has happened. It's been a self-correcting phase. If you look at the overall demand for retail space in the country, today it stands at approximately 5 million square feet. But if you look at the supply which is coming up, although on paper you may see that there is 8 million, 6 million and 4 million square feet of supply coming up over the next 3 years, that's 14, 15 and 16. If you actually deep dive into this supply, what we realize is only around 3 million each, which is 3 million this year, next year and the year after that, there is relevant grade A supply. So what we are seeing for the first time is absorption or demand going to be actually more than supply, which is actually good news, because overall the overall perception has always been that retail supply has been more than demand, and this is where it's very important that we break it up into relevant supply and non-relevant supply. So today if you look at overall vacancy across the country, would show you a figure of around 19 to 20% as the overall vacancy for retail malls in the country. But if you look at only the grade A supply in that comes to just around 10%. So I think what's most important is looking at relevant grade A supply. But the sad part is, even after all these years, developers are still doing malls in wrong locations. Developers are doing inferior products. Developers are not maintaining malls. Developers are selling strata sales. So that's where, in spite of this year, we are going to be seeing 8 million square feet of supply. Just around 3 million square feet of supply is actually relevant. One more point to be noted here is the share of retail in the overall grade A investment grade quality construction which is happening in the country has been reducing. So if 3 years back the overall commercial share was around 35% of the overall construction happening, with residential contributing 65%, today that share has actually become 82% residential and just around 18% commercial. And in that 18%, retail is just around 20%, with office contributing 80%. So there's hardly anyone today constructing malls in the country, which we believe eventually will help in increasing rentals in most parts of India.
All right, Rajesh Mahajan, is that good news or bad news for you? The fact that retail space creation, grade A retail space creation is actually shrinking in the country. Rajesh Mahajan.
The later part of the statement that my friend Ramesh made is a very interesting aspect, that the supply is coming down, so the rentals will go up. But at the same time, these rentals have to be affordable. It just can't be a demand-supply equation. Retail business is not a cost center like office market. It is a profit center, and the retailers, if they are not able to produce good numbers on the revenue side, then there would be a pressure on the rentals all the time. So it is related to the productivity of the retailers. Yes, there is been differentiation which is emerging in terms of relevant supply in retail development and non-relevant supply, and the relevant supply has been seeing good response, and we have seen the recent malls which have come in good locations, better development, good quality developments, have seen higher level of occupancies at a much shorter span than it used to be earlier.
Okay, Anand Sundaram, so rentals, what I'm hearing is that are still very high, despite the fact that there has been a slowdown, there aren't too many takers, but rentals continue to stay high. How do you get out of a situation like that? Because supply of grade A or relevant supply is going down, then rentals aren't going to come down in a hurry, are they?
It's not very likely that rentals are going to soften or come down very much, because we see a very polarized market. There are some malls which are not so well managed. On the other hand, there are the malls which are much better managed, where their focus is on consumption, and the customer consumption bring in higher retail revenues, and that translates into higher rentals. And obviously they are preferred very much so over the other malls and other retail centers, and the retail brands are willing to be there at those centers. So therefore the retail rentals are unlikely to come down in the shorter term. I guess this will be the case for all the better managed centers.
Okay, Ajay Rakheja, so what do you do? I mean, it seems to be a catch-22 sort of a situation. There is supply coming, but then probably it's not the kind of supply that high street retailers are looking to take up. Do you think that 2014 could see better times? Rentals will go up. Is that good or bad? Number one. And number two, will more developers, if rentals do go up and the market looks a bit stronger, once again look at creating more retail space?
Predominantly, if you see 2013, the retail space towards especially micro markets of NCR or towards Calcutta, it has been, the new supply did came up, but it had to slow down, and the leasings or the starter leasing did happen for few anchors only. The vanilla stores, or I would say the more number of people are putting their presence or showing their initial commitments to bigger malls or even mid-sized malls, were very slow towards 2013. So I think there would be certainly a stable growth when we see for next 2 quarters. But towards Q4 this year, when we see a couple of more supply getting ready, and when there will be no vacancies, I think then we should see a firm price and markets behaving in the right way, what retail requires to be in the market.
Ashish Jarath, you're getting ready to launch 1 million square feet, isn't it?
You're delivering 1 million.
You're delivering, sorry, not launch, delivering 1 million square feet in NCR, and this is the situation right now. The market is slow, you know that. So how are you going to play this game between retail and office space?
See, this is the 1 million which is coming into delivery is largely office space. And over last 2 years, what we've seen is there's been a lot of bottom fishing that has happened by the self-user segment. So when doing analysis of this office space, we've seen around at least 40% is going into a self-use. So that is one trend that we've seen across office, where people understand that they've seen the bottoming out of rates for now.
So why have you not considered retail? Let's come to the office trends a little bit later. Do you think that in hindsight it was a great strategy, or it was a part of a larger corporate strategy that we'll stick to residential and office?
Yes, that's a part of the larger strategy that we've pursued to put in the residential first and later office. I think it's some time before we'll go and add some capacity into the retail segment. Now, after office, where as I also mentioned that we are moving another 500,000 square feet, which is the fresh launch into fresh construction.
And that's also all office?
That's all office. That's
Okay.
90% of that is office. So you can see that we see days ahead to be much more positive than what we've seen, and see we cannot we have to plan for 2 to 3 years from now. So we see that upswing coming in, and we are putting in the money there.
Okay, Sameer, so coming back to retail, we look at, of course, questions that Ashish has raised about and some strategies on office space. But retail, I think the biggest story which hasn't played out, and these are some of the things that everybody was talking about and very excited about, that hey, we have such a large middle income community and growing population, urbanization happening, a very young population which would want to shop, and guess what, we should really have malls getting thronged, and not just in tier 1 cities but also in tier 2 cities. My question is, why do you think that hasn't played out? I mean, is it just the economy, or as Ramesh also pointed out, that developers perhaps are also to be blamed that they haven't come out with quality mall supply?
You see, there are many reasons for that. The biggest reason being that, first of all, mall management is a full-fledged business other than real estate, and both have to be combined together to be able to deliver real retail value both to the developer and to the consumer. I think that's the first and most important point, which developers did not really understand. They felt that, and there's been a huge amount of herd mentality. So when the first few malls were launched and there was a genuine demand for them, everybody followed suit, and you had 30 malls coming in the same micro market because the first 4 or 5 sold. And that's what led to a huge oversupply in the market. And without mall management, they were not being able to attract the right set of tenants in each mall, and that is what led to the failure. The second reason what led to the failure was that there was no mixed use development that came around the mall. So they should have been smart enough to build malls with ground and first floor as retail and upper floors as office space. That is also what has led to this big downfall in the mall segment, because they built 5-floor storied malls where there was no demand in the 3rd, 4th, 5th floor, and that leads to a huge amount of vacancy. That's the second reason. The third thing that nobody is really looking at, and going future one has to be very take all this into account, is the internet sales. Now what you are seeing, the Flipkart, the Snap deals, they are crossing $1 billion in sale, and in the next 3 to 4 years we are estimating $16 to $17 billion of sales happening in the retail segment online, and that too with great deals available. So retailers are not doing well. So I think, I don't know what the overall share, the organized retail share internet companies will take away from them, but I think the developers have to be extremely careful. They have to get the right mall management companies, and that still remains a concept in this country.
Well, the DLF mall, which is supposed to be the mega mall of India and change the entire sizing concept of malls in India, has been many months delayed.
That's because Ambi Mall came along and took away all the tenants, and you have 1 million square feet of retail in addition to 30 odd malls in Gurgaon. There is no demand
left
whatsoever.
Okay. So Ramesh, your thoughts on this online business and how it's taken off and what it's going to do to the future of retail in India? I mean, do you think developers still have a compelling reason? Because see, land in markets and urban centers which are likely to do well in the next 5 to 8 years are probably very difficult to come by, and are also very expensive. So how do developers really play this game, if at all?
Manisha, I'll touch upon the online trends and also touch upon the key retailer trends. Let's look at the panelists today, including you. How many of us have actually decided not to go to a mall and shopped actually online, other than those one-off books which we keep buying? So I think in India it's quite some time away. I'm sure all the panelists here have we are not going to stop going to malls on Saturdays and going to online go and buy stuff from all the websites around. That's one. Second is, if the retailer behavior has changed. Today he is not looking at dots in the map, which is what he was looking at in 2007 and 8. Today he wants to be in the best performing shopping malls. Second is retailer format sizes have changed. The same supermarket which would look at 10,000 square feet today is looking at 5,000 square feet. The same department stores which would look at 40,000 square feet today are looking at 25,000 square feet. So that's another big shift. And the third, like Rajneesh pointed out, is it has to be malls which actually work in terms of whether it's mall management, whether it's in terms of affordability. So that's very, very important. So we are seeing a distinct change in retailer behavior over the last 3-4 years, and that's obviously impacting the overall mall supply in the country.
Ajay Rakheja, compelling business for developers to look at creating retail malls in the next 5 to 8 years, or not yet?
No, yes, if you see the concepts of designs that has been coming up, or the new designs concept which has been lately followed, it's more towards high street malls rather than, fancy swanky malls with high luxury specs. So I think those kind of specifications are catching up with common man, and they're ready to shop and, move and dine together and, shop also, so which gives more convenience of shopping as well as experience of moving and, open to sky kind of concepts. So these kind of concepts are really bringing in more value to end consumers rather than, a closed-net malls which
You've not answered my question.
fleet of repeat brands.
Is there money to be made by developers if they get into or they look at retail space very, very, let's say carefully, get their strategy right? Is there money to be made? Or it's still a business which is a tough one to crack for the next couple of years?
Well, I would say if they have a patient capital and they can sustain themselves for next 5 to 7 years with capex, high capex on construction and fit outs, and they're also ready to get involved with the minimum guarantee concepts and revenue share concepts, they should put their hands still in this business. There is still some juice left still in this retail business, yeah.
Okay, final word before we wrap up the retail discussion and move on to office space. Anand Sundaram, you've had a decade of mall experience and 20 cities around India. I mean, give us the final takeaway. Is the worst over? Does the fact that an IKEA and Tesco, they're looking at entering into India, are these the triggers that would actually give a push to this market and probably A, firm up rentals, and B, give developers some compelling reasons to look at creating good mall space?
I'll have to deep dive into what our records and what our research shows. The polarization of these markets have been very hard, where some of the better managed malls have recorded profitability in excess of 25% growth year on year. And the same has been true for consumption, which is about 35% growth year-on-year consumption, which is translating into some great monies for malls. So it is good business to be in. On the other hand, the not so well managed malls have lost out. But to come back to your question, yes, these retailers and the news that these retailers are spreading has buoyed the market up, and there's a substantial amount of activity in the market. Added to that is a shortage in supply of organized A-grade malls that Ramesh was talking about. So I think there's a great story in the going in the future, and yes, it looks very promising.
All right, on that note, we're going to wrap out of the retail space, but there's still, of course, a large part of commercial, which is the office space. It's a much bigger discussion because as geographies change, I think the trends also have been very different and divergent all through 2012 and 2013. So keep an eye. That's the other side of this little break that we're going to take right now. Welcome back. We're looking at whether the worst is over for India's commercial real estate market. We've already looked at the retail space because we had a panel heavy on retail, and now of course it's time to look at the big market, which is the office space, because as one of our panelists pointed out at the top of the discussion, in the entire commercial pie, 80% is actually office space. So let's focus on that a little bit, some data to set perspective. JLL report, well, look at Asia Pacific. It's not done badly. 2013 was a record year for commercial real estate in Asia Pacific. Transaction volumes were about $127 billion US, up 29% on 2012. India, though, didn't do very well. Its share was just about US $10 billion, and also look at the rents in prime office spaces in Mumbai, Delhi versus Hong Kong and Beijing, and you'll see how poorly we still fare, even though if you look at offices or people who are going to rent out space, they say rentals are very, very high in India. But anyway, those figures aside, I think there are many stress points. Corporates are focusing on cost savings just as they are on the retail space. So Ashish, because you're now ready to deliver 1 million square feet, tell me, What's going on? I mean, are you worried
No, not exactly
for
worried.
2014? No.
No, I think 2013.
So what's happened to this space that you're going to deliver? I mean, is it on a rental model? Is it on a sale model? And if it is, what are the trends?
This space largely is on a sale model, where, as I mentioned, around 40% of that is clearly identified with the user already. And for the rest of the 60%, we are in active discussions to help them lease that through the company. Now, having said that, now we've seen also second half of 2013, we've seen some good demand coming back into the commercial segment.
So the finance minister says that yes, the worst is over. Would you agree with that, the worst is over?
I would agree with that, largely because more and more buyers today understand that the prices have bottomed out. Now, just to give you an example of, let's say Gurgaon on a golf course extension road, where if you look at 4 to 5 years ago, the commercial real estate was, office space was priced at around twice the residential space. Today, the residential prices have overtaken the commercial real estate space. Whereas if you look at the rental that the same real estate is supposed to give back to you, residential would hover at around 20-25 rupees a square feet, and the commercial would hover around between 60 and 70 rupees a square feet at the same value. So, where should the fresh investment go? It will follow where the, there is money to be made.
All right.
There is money to be made in commercial now. We feel it is bottomed out.
Okay, so prices bottoming out. Let's just take a look at it, because, if you look at last year itself, you had one of the countries, not one of the countries, the country's the largest developer saying, DLF saying that on October 31st to the analyst, that they're holding off building new office towers until they see recovery in demand. You have Oberoi Realty, largest by market value, also second largest by market value, considering converting plans to build offices into residential buildings. You have Raheja Constructions, redevelopment of slums is what they do in Mumbai's North Mumbai, and they also have shifted from offices to residential. Sameer Jasuja. So these are trends that we've been discussing all of 2013. Do you think prices have bottomed out?
Yes, I think prices have bottomed out for 2-3 reasons. One is that there is no the offtake has really come down, so developers have been forced to reduce prices. If you look at BKC, for example, we were talking about rentals between 300 to 350 rupees a square foot, is down to 200 to 250 rupees a square foot for grade A buildings. Surprisingly, Gurgaon Cyber City as a micro market has done very well on rentals, but because of oversupply and because of developers not being able to hold on to the commercial property for long, there's been a dip and prices are kind of bottoming out. The second reason is that I think for commercial offtake, commercial buildings to be built, like why have these developers already stopped plans for construction? Because huge amount of capital is required to build retail or commercial, and that capital is just not available. In retail, even if you want to build it and there's compelling reason, you have no capital. In commercial, I think there is an oversupply. That is very important. Now that oversupply has to get absorbed, and till then you will not see fresh supply coming into the market. What is seeing maximum activity in the commercial segment, which has been a very pleasant surprise for 2013, is the Blackstones of the world going and buying out rented buildings, which was just not a market.
So clearly they're seeing a lot of money in that market. We're going to come and look at that a little bit more in details, because PEs have been extremely busy with commercial assets. In fact, there's an IDFC alternate fund which just closed. They also want to look at commercial assets very, very closely. Gitesh Agarwal, come in here. I mean, you do fitments for these companies, so you've got an on-ground feel. What do you see? I mean, we've seen 2012 as a dull year, 2013 perhaps even a bit more dull than that. Do you think that it's bottomed out now?
Manisha, 2012-13, when you look back, is actually been like a status quo, and 2014, which most of my colleagues on this panel are saying would be a good second half, probably at about 28 to 30 million square feet. It's almost on par, given the fact that there will be a new supply coming in. From our perspective, the fact that Bangalore would be the biggest churner or growth-oriented market, followed by Mumbai and NCR, those are the focus areas for us, because the analysts say that they will be generating almost 150 million square feet in the next 4 to 5 years. For us, that's a good news. It's been a dull year, 2013. 2014 has started off in a small whimper, but we're hopeful after the elections things would move faster. There'll be a more positive attitude, optimism everywhere, provided there's a change overall in the country.
Okay,
so looking good. I would not say there's been, except the fact that there was a pressure, everything's been good.
All right. Okay. So you said, you mentioned cities. You obviously mentioned Bangalore in a very positive light. You spoke about NCR and Mumbai. You left out Pune. Is that not the market which is also an exciting market in terms of commercial office space?
No, absolutely. I mean, in terms of priority, the first three, Bangalore, Mumbai and NCR, take the leap. And as my colleagues would agree, Pune, followed by Chennai, and I think to an extent Hyderabad also is showing some sort of revival. Pune is doing very well, there's no doubt about it. There's a lot of business going to Pune. It's peripheral, it's low cost, it's got a good supply of people, it's got a decent infrastructure, it's got high quality global outlook. So Pune is definitely doing well.
Okay, Ramesh Nair,
Totally.
what's your perspective? I mean, India's office space story has been quite dull. We've seen developers shifting from offices to residential, though, you know, Pirojsha Godrej, and I did a recent interview with him, he said everything is overblown in this country. When developers start moving away, they do, but there is demand which is going to return, and probably this is not the time to not have an outlook on office space and continue to focus on that in the right manner.
Manisha, you're spot on. Today, no developer across the country is actually developing office space. There's hardly any concrete being poured for office projects in any city. So, a little bit of historical analysis is very important here. If you look at the supply situation between 9 and 2011, what we were seeing is those 3 years supply was actually around 45 million square feet year on year. But if you look at 12 and 13, the supply has actually come down to around 35 million square feet. So from 45, the supply has dropped to 35 million from a pan-India level. If you look at a city like Mumbai, supply in 2011 was 15 million square feet, 12 was 12 million square feet, and 13 is dropped to 8 million square feet. So supply from 15 has come down to 8 million. Today, this year again, our estimate is it's going to be around 7-8 million square feet. So demand supply mismatch, that imbalance is kind of balancing out, because today developers are not building and delivering commercial buildings. If you look at again on the positive side, rentals on the third quarter, if you look at third quarter 2008, when rentals were at its peak, commercial rentals were at its peak across the country, and if you give a score of 100, Bangalore went down to 79 from that 100 mark in 2009. Today Bangalore is back to 99. Mumbai again, which went to around 62. For the first time in Mumbai, what we saw last year was rentals actually went up by 4% in the last 6 years. For the first time, we saw rentals going up. Secondly, we actually saw vacancy levels for the first time since 6 years actually come down. So vacancy levels, which are at around 24%, come down to around 22.9% in Mumbai. Again, on the PE front, you touched upon it, Manisha, we saw the best possible year. Close to $1.6 billion of money came into the country on the PE front, compared to three previous years where hardly 600 million to around 800 million dollars was coming in. Today, if you look at some of the largest sovereign funds or the largest pension funds or the large PE investors, whether it's a Qatar Investment Authority or a CPIB from Canada, or you look at Blackstone or Morgan Stanley, all these guys are looking at investing in income producing office assets. You take into account escalations and you look at leverage, they get a good fair return of close to 15% investing in Indian office real estate. So overall story, vacancy levels slowly dropping. Absorption has been steady. We're keeping it at close to 27-28 million square feet is what the absorption is. Again, looking back at the future, if you look at 14, 15 and 16, close to 34-35 million square feet of space is coming up. Exactly what I told in the retail segment is happening in the office segment. Out of this 35 million square feet of office space which is coming up, just around 22-23 million square feet is relevant supply. So for the first time, what we're going to be seeing is demand of 27 million square feet, but absorption of only around 23 million, supply of only around 23 million square feet. So we are seeing absorption actually overtake supply, but supply being defined as relevant supply.
Okay, Ajay Rakeja, would you agree with that? I mean, this is probably the rentals have bottomed out. They were very depressed, and from here on, at least in 2014, you are going to see much better days, and even the next 3 years, because it's not fair, at least in office space, to take just a 1-year perspective.
Yes, I agree with Ramesh on this. See how 2013 behaved. We started very reluctantly on the expansions, so we were not hearing the good news when we started 2013 in all markets. But gradually, when we approached towards half year, I think we started seeing consolidations and lease rather getting renewed. You know, people started looking for the new office. So that bull run started capturing in 2013 towards September onwards, and from September till March. This year we have already seen almost a 5 million absorption in Gurgaon and almost 500,000 towards Calcutta. So that's really showing positive signs. And rentals have been stable. We don't expect developers increasing the rentals for the last 2 quarters. It has been stable. But the absorption levels has been quite a decent increase in last, I would say, 2-3 quarters. And this is giving a positive signs to the total office market as developers are taking now further which have stuck up projects or want to put up more money back to some under construction projects are again back on action.
Okay, so seems like everybody is agreeing to the fact that the worst is over, but of course everybody is also hoping that from here on the economy is likely to improve. We will have a stable government by the mid of this year. What are the expectations on the economy and the political front, because the fortunes of commercial real estate and office space are very, very closely tied to that. We come back and get our panelist view on just that. Welcome back. Our realty debate today, is the worst over for India's commercial assets and property markets? Well, the panel has agreed to the fact that in terms of retail, it's just a question of whether you can create the right retail space, grade A space. You will always have takers for that in the right markets. But if you come out with shoddy products, it's not going to fly at all. In terms of office space, things are already looking a little bit healthier. The vacancy levels are dropping and rentals are at least stable. In some markets, they've also started showing an appreciation. Now the question is, how will things pan out depending on what the outcome of the elections is and how the economy will pan out from there on. So my first question to Mr. Anand Sundaram, Chief Executive Officer, Pioneer Property Zone. Mr. Sundaram, what are your expectations? I mean, I know everybody is hoping for the best, but what's your personal gut feel?
Well, we interviewed a lot of retailers, quite a few retailers, both who are in India, who are Indian retailers, as also retailers who are aspiring to be in the country.
Okay.
They have a very similar answer. They don't expect something to happen overnight. They don't expect very great things to happen overnight, although they're desirous of doing so and they have given a wish list of things that may happen, but they recognize that it will take time. The best thing is they're not really worried about what or who will be in power. They're saying as long as there's stability they're in and their expansion plans are in full swing. I really don't see much of a difference over there. Yes, they want the GST rollout and they want all kinds of other SOPs in, but that doesn't really deter them from going full steam ahead. That's what we've observed.
Okay, there's a lot of exuberance on the stock market side already. I mean, everybody is factoring in, FII money is flowing in, so I'm not surprised that, there is positivity. But the turnaround in the Indian economy, Rajneesh Mahajan, that everybody is hoping for, will it just happen with stability? There's so much more which is required, isn't it? And are you worried that even a stable government will be able to pull up its socks very quickly and get back on track with investments?
I think the entire environment to have a positive outlook and small steps in a positive direction would motivate and encourage a lot of investment and consumption both. The way we look at it, yes, there is a flat or stagnation in the footfalls or in the consumption patterns, and with the positive environment, we believe that consumption will come back, whether it is in automobile or travel or in apparel, accessories, eating out. So there has to be a positive environment which definitely is dependent upon the stability and the consistent governance and the economic policies which would encourage and help in increasing the consumption, and that would impact positively the retail development and the retailers' growth in India.
So we're talking about a sentiment change, and everybody's hoping, Sameer, that there's going to be one magic wand which is going to come. We'll have a stable government. Everyone's going to be very enthused because people have been quite worried over the last 1.5 to 2 years, and consumption will start, purse strings will open up, and of course there will be a positive impact of all of that.
No, absolutely.
Is the exuberance a little overbuilt?
Absolutely. I think all of us want to look at positive aspects and hope for the best. But I definitely am a firm believer that nothing is going to really change in this coming 1 year.
Ashish, what is your own gut feel? I mean, how are we going to go in 2014? Stability, I think, has become the key. Economic revival is still a long way to go.
See, we're not looking at some quick fixes. We are focused on the fundamentals. If you look at it, are we going to come back to say a reasonable rate of growth, let's say 7% or so? Where is that 7% going to come in the next 2 years? We are
7% in the next 2 years, my goodness, that's fantastic.
I'm saying we are going to
at least start going that way, reverse the direction, falling direction.
Now, the rate of growth has been services led in the past also, and the quick revival will come, we expect to come it out of the services side itself. Now, services is the biggest consumer of the retail as well as the office real
Absolutely.
estate. So we are looking at the services growth reviving and that having an immediate effect or a ripple effect on the real estate. The growth cannot be without space. So we are directly related to, we are a play on the economy. So as we come back to the growth space, we see a direct impact coming and benefiting us.
Okay, Gitesh Agarwal, you already said that, things haven't been that bad in 2013 and 2014. The beginnings, at least a couple of first few months, have not been that bad. So things are going to look much better or just a tad bit better post-elections?
Well, Manisha, I chose to keep my language positive. Nothing else would have helped. But to give you a perspective, it's not just a good future for India that we keep praying for, but also America and Europe, because the big growth is going to come out of ITES, the expanded version of it, the BFSI, and Americans and Europeans do a bit for India. So we keep praying for their economies as well.
Ramesh Nair, sum it up for us, the risks and the positive things that we could see post-May.
Positive things, basically a lot of corporates have been waiting and watching. So the last 2-3 years, many of them have been actually delaying their decisions. Today the same people, what they are seeing is the same building which is available for 100 rupees in an Andheri 2 years back. Today the same landlord is quoting 110, 115. So actually rentals are beginning to go up.
And we leave it there. Thanks to everybody. Ramesh Nair, Anand Sundaram, Rajneesh Mahajan, Gitesh Agarwal, Ashish, Ajay Rakheja, Sameer Jasuja. Gentlemen, pleasure having you with us. It's always nice to look at trends and it's always nice to hear those small things. The worst is over. Things are starting to look slightly better. At least the oversupply situation, as we saw in the commercial real estate space in 2013 and before that, is likely to become lower and lower or go down further, and things should firm up. And of course, now everything rests on how the economy turns around and how quickly it turns around. Thanks very much for joining me. We'll keep bringing you more trends, more markets, and of course, more discussions and debates in the property space. You're with NDTV Prime. Much more programming, exciting shows to follow.